Welcome to The Explainer. We're diving into a real head-scratcher today, Tesla's Q3 2025 earnings report. They just put up some absolutely record-breaking numbers, but the market's reaction, well, let's just say it was not what anyone expected.
So this is the big question, right? Tesla just had one of its best quarters ever. So why on earth did its stock price still fall? It just doesn't seem to add up. And that's the mystery we're going to unravel. Okay, so on one hand, you have this. The company delivered a staggering number of vehicles. We're talking almost 500,000. That is an all-time quarterly record for them. A huge, huge win. But then, on the other hand, you have Wall Street's reaction, a 5% drop in after-hours trading. See what I mean? It's a total paradox. Record success, falling stock. Let's break it down.
Okay, let's dive into this. To really get what's going on, we got to start with all the good news from the report, because believe me, there was a lot of it. So those record deliveries, they weren't just a fluke. They actually represent a really solid 7% growth in vehicles delivered compared to the same time last year. That's some serious momentum. And it wasn't just about the number of cars either. Revenue absolutely crushed expectations. It came in at $28.1 billion, which was well above the $26.5 billion that analysts were predicting. Another big beat. And this is what really shows you how healthy the company is financially. Tesla is now sitting on its biggest cash reserve ever, a mountain of cash that gives them a ton of firepower for the future. So you get the picture. By almost every single operational measure, we're talking deliveries, revenue, cash flow, it was just a massive win for Tesla. I mean, on paper, this quarter looked absolutely fantastic. So we've got all that great news. Let's move on and see how this builds, because all that amazing operational success didn't quite translate into profit. And this right here, this brings us to the very core of the paradox. This is the big reason for the market's strange negative reaction. Where did the profits go? To really get a handle on this, we need to look at a little metric called EPS. It just stands for earnings per share, and it's basically a simple indicator of how profitable a company really is. Now, what's really interesting about this slide is it shows that earnings per share fell. A lot. We're talking a 31% drop from last year. And the real kicker, it even missed Wall Street's estimate, which they had already lowered. Not a good look. So what happened here? Well, it was kind of a perfect storm. You had tariffs that cost them over $400 million, ouch. There were some delays with the Cybertruck's full self-driving software. Then you had these one-time costs from switching to a new AI chip. All of that stuff just ate into their margins. So with those present-day financials now out on the table, the conversation on the earnings call took a pretty dramatic turn. It shifted away from today's numbers and blasted off into a very ambitious future. Yeah, Elon Musk laid out this incredibly aggressive timeline. I mean, just look at it. Robotaxi fleets launching in many cities by the end of next year, a new affordable EV for under 30 grand launching in early 2026, Optimus robots working in factories by mid-2026, and millions of fully autonomous Teslas on the road by the end of 2026. Wow, that is a lot to promise in the next 18 months. Okay, so this wild combination, a mixed financial report paired with these huge futuristic promises, it left analysts and investors, completely split. The market is divided. And here's the crucial point. You have two completely different interpretations of the exact same data. You have the bulls, who believe this short-term profit dip is totally irrelevant. They say the real value is in the future tech, autonomy, robots, the whole shebang. Then you have the bears, and they see those shrinking car margins as a serious red flag. They think that 2026 timeline is just unrealistic, and that the stock is overvalued based on today's performance. Ultimately, this quarter forces every single investor to decide for themselves. Are you investing in the company Tesla is today, or the one it's promising to become tomorrow? Is that future a sure bet, or is it a very risky gamble? Right now, it's clear the market just can't make up its mind.